jobs growth slowed to a crawl last month. I want to bring in CNN's Matt Egan, who joins me now. So what are these numbers? What are we seeing in this?
Well, Omar, look, after years of resilience, the U.S. job market looks increasingly fragile, especially after the latest numbers that just came out. So this report just moments ago shows the U.S. economy added 22,000 jobs in August. That is very low. It's also just a fraction of the 77,000 jobs that had been expected. The unemployment rate went up to 4.3% from 4.2%. That was expected, but this is notable because this is the highest unemployment rate since October of 2021, and it breaks a stretch where the unemployment rate had kind of stayed in this very low range. Still relatively low, but moving in the wrong direction. The other big news here, though, is what happened as far as revisions. We saw that July was revised a little bit higher. But more important was June. June was revised from a low number of just 14,000 jobs were added to now negative 13,000 jobs. It's not quite showing up on that bar chart, but June is the first month where the U.S. economy lost jobs since December of 2020 during COVID. So this breaks a nearly 5-year stretch of job growth, of uninterrupted job growth in the U.S. economy. That's the second longest stretch in U.S. history, but now it's over. And when we're digging into some of the sectors here, a couple things stand out. We're seeing a number of the goods producing sectors in the U.S. economy lose jobs, right? We're talking about construction lost 6,000 jobs in August. Mining and logging also lost jobs. Manufacturing lost jobs as well. 12,000 jobs for manufacturing, which is, I think, pretty notable because one of the issues in this economy is all the uncertainty over trade policy, right? Tariffs are supposed to be supporting the manufacturing industry, but instead, the manufacturing industry is actually losing jobs for 4 months in a row. This is the unemployment rate going back to 2020. You see that massive spike on the left side of the screen. Of course, that was COVID, came down dramatically, stayed at historically low levels. But now, on the right side of your screen, you can see it is starting to tick higher. So I think you got to put all of this into the bigger picture, right? We've gotten a number of different indicators showing that this job market really is starting to stall out. And you're looking at U.S. markets reacting. The Dow futures were down a little bit before this. They actually came up just a tiny bit from where they were. Not a major reaction, I think, from investors. I think that's because in a lot of ways, this report, it probably seals the deal on an interest rate cut later this month from the Federal Reserve. Wall Street was already thinking it was basically a slam dunk. And I think that this latest weakness, including the fact that the unemployment rate is up to a nearly 4-year high, I think that's probably going to seal the deal on a rate cut from the Fed, which is obviously something the White House has been calling for. Of course, they wanted a cut because of low inflation. That's probably not the reason, right? The reason would be because of low hiring. And
of course, this is the first jobs report since, the controversy over the regular reporting of jobs numbers last month. And so even these numbers could get revised in the future, but as you just laid out in June, the numbers could also get revised down.
Right, absolutely. Look, revisions are normal. It happens, right? As the BLS gets new survey responses in from the businesses they talk to, they're going to update their numbers just like a meteorologist who updates their hurricane forecast when they get new data. Unfortunately, these updates, though, they've been mostly coming into the downside and again, showing that hiring has really stalled out here.
And it's negative in June. It's just the floor of that graph is zero.
Negative, exactly.
We can't see it. Matt Egan,
Thanks so much.
Appreciate being on the Breaking News as always.